Back at it again with another one, and today we're looking at the NASDAQ. Um, Very nice movement yesterday. Very nice movement. I wasn't a participant. Well, I tried. My stop was a bit tight, and life was going on, so I couldn't give the chart my full attention. But we're still gonna go over the movement though. So we're looking at the daily chart right now. Let me move this. Yeah, we've been selling off. Monday we had a down day. Tuesday we had a down day with some bullish movement. This wick hinted to the bullish movement. Look where it reacted from. We had this daily order block over there. We rammed into it. Strong reaction. And then the next day we dipped and shot up. So yeah, very beautiful trade, like I said. Yeah, I'll speak on my thought process as well. I'll show you all where I entered and the outcome for that. So we'll go to the hourly, just take a quick look, see. Cool, right? You can see yesterday the daily open. Right, this is where the action was popping off. That's that order block on the daily chart, right? And we shot up. I saw some slight divergence yesterday. Slight SMT divergence with, I think it was the Dow at the time. Let me just see. Yeah, at the time, I saw some slight SMT via the Dow. Nasdaq was sloping down. Dow was sloping up. And then here's the trade that I saw yesterday. Zoom in. Okay. So daily order block came through. I was like, nah, we are definitely bullish. Definitely bullish. Okay. Looking back in hindsight, I bought above premium. I mean above equilibrium. Right? We're looking at this dealing range here. This current dealing range over there. I should have bought under that 50% level. But me, I bought above the 50%. I'm going to highlight the fair value gap I noted. So obviously we know SMT with the Dow, right? I'm just going to move this. I saw this, right? Consolidation, price stabbed into this. And then I saw that price swing up. And I noted that we opened that fair value gap over here on the M15. Right? Let me highlight that out. Make that bullish. Okay. So you see the fair value gap over there, correct? My buy entry was there. My stop loss was beneath this. And my target was these relative equal highs here. You can even see we have some more liquidity over there. So like, double layer of buy side. That was my target. Like I said, I saw a stab into this, open up the fair value gap, got in, but then this was like way before, like 7:45. Then 8:15 we had that drop. 8:30 had that further drop again. 9:15 after we took out, like, I was part of the liquidity to help finance this move here, but it's all good. Lesson learned: buy up below equilibrium and sell above equilibrium. Now let's go to the entry, M5. Right? Now look at that. That's where my initial buy was. My stop loss was there. I got taken out. Not a problem. Now price went down. Here's another level of relative equal lows. Took out that liquidity and then printed an engulfing candle. So this candle, 1, 2, 3, and most of the range of that one there in that 1 5-minute move. So it showed a lot of bullish movement. We had this candle form over there, and then we opened up that fair value gap. Just gonna make that red. Oh, well, let's say green, so we can see where the entry would have been. Right, so you saw I entered there above equilibrium, which is not on, but under equilibrium. Look at this. Took out liquidity. Okay, it's like a balanced price range. So it gives confidence to know that under this is a safe place to put your stop. So this is like how many points? It's 33 points, right? 33 points to target. $248. So that's a nice deal. Definitely a nice deal. But the main takeaway is this. This is just so crazy. Yes, like 945-ish, 950. So 1, 2, 3. 3 opportunities to go long. Under equilibrium. Way under the daily open price. What's the 830? And you see, above that 830. Below the 830 open. What's the 830 open? Right there. Shop. See, 1, 2, 3 chances to enter in that fair value gap that opened below the equilibrium of that price dealing range you were looking at, below the daily opening price and below the 830 open price. So lots of confluence is working in our favor. Lots of confidences. I'm also just gonna do this for further analysis purposes. Projection fib. Now would you look at that? This also happens to be now OTE zone. Right? Fair value gap is at that 0.62 level. So that sell off down to OTE, shoot up, break again, and then it just flew up. Just flew up. Beautiful trade. M15. Beautiful trade. Could pair that with the order block as well. That down close candle, the last one, to give strength to our fair value gap. So we have an M5 fair value gap layered on top of an M15 order block, layered within our OTE zone, below the daily opening price, and with our profile of a Tuesday low of the week. I'm telling you, man, we have to look into these weekly profiles. But above all, we had our drawn liquidity. So we knew where price is more than likely to go. We knew where we were at the time. So we just had to flock in and find an entry. And that is indeed what happened. Beautiful, beautiful trade. I wish I was a participant, but I've learned quite a lot, which is be attentive at your charts, especially on a Wednesday, which is Q3 of the weekly cycle. Bit of quarterly theory there for your ass. Let me see. 8. Yeah. The first quarter is 6 to half 7. Half 7 to 9. Yeah, and then it's 9 to 10:30. So this was, and during Q3, this is Q3 of New York session. New York session is almost Q3 of the daily cycle, and then Wednesday is Q3 of the week. So again, the quarterly theory comes through and gives us additional confluence. It's very interesting because I'm on the cusp of consistency now, and I can gradually taste it. I can feel it coming, and it's right on time. It's been a long journey to get to this point to know what I know now, but I'm thankful to God because the journey made me hard, and it showed me that I really do want this more so than the money, just the skill itself. Always be a lifelong learner and remain forever teachable. Today, I expect us to go above that. We'll see. It's NFP tomorrow. I'm not taking any trades. I'll paper trade though, most definitely. And yeah, more life.